UK households which are in debt owe nearly £22,000 on average, and that's before you take the mortgage into consideration. By the end of May this year, consumer credit lending to individuals had reached £233 billion. According to some money advisors, though, a huge number of the agreements for these personal loans could be unenforceable, and banks and other lenders could be faced with writing off millions of pounds worth of debt. Natalie Steed has been following the story. Natalie, exactly what kind of loans are we talking about here?
This is about personal unsecured loans of less than £25,000, so definitely not mortgages. And it's specifically about loans taken out before April 2007. These loans are covered by the Consumer Credit Act of 1974, which says businesses offering loans or consumer credit must be licensed by the Office for Fair Trading and must follow strict rules on how loan agreements are set out. They have to include things like who the loan is with, the total amount payable, the total charge for credit, APR and the amount and timing of payments. If this information is not properly set out, it could be that the agreement is unenforceable.
What exactly does unenforceable mean? Can people simply walk away without paying back the money they've borrowed?
Well, yes, it could. If the loan is unenforceable, it doesn't mean that it will automatically be written off. You still owe the money. It's just that the banks or lenders can't force you to pay it back if you stop making the payments. So in effect, the agreement is worthless. As I said, the rules only apply to loans taken out before April 2007. For loans arranged after that date, it's up to a court to decide whether the agreement is enforceable or not.
Have you any idea how many people this could affect?
Well, it could be quite a lot if the findings of one website are to be believed. Lawanswers.com looked at 200 loan agreements made before April 2007, and it says that at least 7 out of 10 didn't meet the rules, and therefore, they say, these agreements are unenforceable. According to the Office of National Statistics, just over a third of households have some unsecured debt, and many of these agreements will have been taken out before April 2007, so it could affect quite a lot of people.
Thanks, Natalie. Well, Keith Turner is a solicitor from Turner Coulston and specialises in consumer credit issues. He's been looking at some of these agreements. Keith Turner, 7 out of 10 personal loans unenforceable. These figures seem extraordinary. Why are so many likely to be unenforceable?
The reason is because the rules are so incredibly difficult to follow. The 1974 Act was followed by a large number of statutory instruments, each of which is immensely hard to follow. I'm not at all surprised there have been mistakes. It's exceptionally hard to make sense of it, and one does need to be something of a specialist to be sure.
So we're talking mistakes here?
We are, yes.
Not intentional misleading of customers?
No, the intentional misleading has come in other sections, like misselling of PPI, and
which is personal protection
insurance, that's right,
yes.
Which is designed to cover people who become unemployed after they've taken out the loan. And the problem is that the premiums for those loans are often added into the loan itself, which may well make the agreement unenforceable, because that in many cases will mean that the information is in the wrong column, interest is added to the premium, which is illegal and almost certainly makes the agreement itself unenforceable, as well as perhaps getting the ability to get back the PPI premium and interest on it.
David Coe is Head of Finance at the money website fool.co.uk. David, have you come across this?
Well, I think there are various things that you need to consider. I mean, the first one is whether or not the contract is defective. I mean, there's a slight difference between a contract being defective and one that is unenforceable. Now, I think what we're actually talking about here is that, there are a lot of defective agreements out there, which therefore means that they may or may not be enforced by the lender. Now, the only person who can decide this is a judge. So if you believe that the contract that you have signed is for some reason defective, then you could use the courts of law in which to challenge that particular contract. But there is a danger there, because the judge could say, well, you signed this contract in good faith, so therefore you must carry on making those payments. Now, I think the only situation where people should try and challenge these contracts is if, for whatever reason, they are unable to carry on making the payments. Then it's almost like a last-ditch attempt to try and save yourself. and then you could throw yourself at the mercy of the courts and say, yes, I cannot carry on making these payments. And you could find the judge becoming quite lenient and say, yeah, in that case, there might be something defective there.
So it's an argument for someone who can't pay rather than won't pay.
Well, that's right. If you find that the contract is, for whatever reason, defective in some way, you could even go back to your lender and use it as a kind of a bargaining tool. Go back to your lender and say, did you know that this contract is defective in some way? And then maybe you can negotiate outside of the courts.
So, Keith, it's not as clear-cut as simply being able to walk away from a loan agreement without paying any money back?
I'm afraid I disagree with that entirely. It is that clear. It's a question of law. The agreement is enforceable or it's unenforceable. And you can tell by having the agreement checked using something like a checker loan system, which my firm has use of. But it is not, as it has just been described, it's not a thing of last resort. You should check your loan agreements, and if you're the least concerned, have it checked out by various people, including other solicitors. It is not a last resort. You can do it at any time.
Have there been court cases?
Yes, they have. They've even gone as far as the House of Lords, and it was made perfectly clear that if the agreement is defective in any way, almost even tiny things being wrong, then the agreement is unenforceable. Can I just say there are two sorts of unenforceable. There's something which you can call fatally unenforceable, where the court has no jurisdiction to enforce the loan, and there are other parts called discretionary unenforceable, where the court can decide to enforce, but on terms. It can order compensation, it can order reduction in the amount, it can do a variety of things. This is an extremely wide-ranging remedy.
David, it does seem fairly clear-cut from what Keith says.
Well, it does, but I don't really recommend anybody sort of try and take the law into their own hands and say, well, I believe this contract to be unenforceable, so therefore I'm going to stop paying, making any further payments, because you could find yourself on the wrong side of the law, and then you could lose everything.
And what about your credit reference file? Is that likely to be affected?
Well, clearly, I mean, if you lose the case in the court of law, then you would find that your credit rating will be will be affected in some way. So I think for people who can carry on making those payments, I mean, I don't know about you, Keith, but I mean, I just think that if you signed a contract and you borrowed money, you should be repaying it.
Surely, Keith, people are morally obliged to pay back money they know that they owe.
Well, to a large extent I agree, except that in this particular case, with huge numbers of cases where the PPI insurance has been virtually fraudulently missold, I think the morality is very much against the banks and very much in favour of the consumer. They have basically been ripped off by the banks, and they shouldn't be allowed to get away with it.
Aren't you trying to whip up a storm here to make some money? You are a solicitor, after all, and you have a business to run.
All of that is true, except, of course, my job is to help people when the law is on their side, and in this case, it is.
David, what are the lenders saying about this?
Well, I think you have to... Well, first of all, I mean, as far as Keith is concerned, I don't think you should try and confuse payment protection insurance, which was clearly missold in many situations, with this particular case. I mean, what you're talking about is whether or not the contract had the I's dotted and the T's crossed. Now, there are different ways in which you can calculate annual percentage rates, for instance. And so, I mean, this new method by which it is calculated may not comply with the ones prior to April 2007, but it doesn't mean that the contract is defective.
So what advice would you give to anyone then who thinks that they might be affected by this? Where should they seek help?
Well, I think, there are places that you can go to. I mean, clearly, Keith's site is one in which you can go to. I mean, there are others like the Financial Agreement Solutions site where you can have your contract checked in some way. It'll cost you £30 to have that contract checked to see whether or not it is defective. But I still believe that, people have a moral responsibility, that if you have borrowed money, then you should repay it. And the fact that, something wasn't completely sort of clear to you at the time is no reason for you not to repay that loan.
David Crowe and Keith Turner, there we'll have to leave it. Thank you both.